Welcome to another video. Now, before I give my opinion on what I think is going to happen with the property market in the next few months, let me just explain how inflation works and how it's currently having a big impact on all of us. Now, I don't know about you, but since we've come out of this third lockdown, the price of everything seems to have shot up. From a pint of beer, to food, hairdressers. I even went to book a day out at the zoo for the family, and the price of that has increased significantly from the last year or two. So we're clearly seeing an increase in inflation, and to be honest, it's no surprise. People have more money to spend because of saving during the lockdowns. Interest rates are at an all-time low, which is meant to encourage spending. Businesses and retailers are hiking up prices to try and claw back profits which have been lost over the last 12 months. And there's been billions of pounds of stimulus money pumped into the economy, and there's also a high demand for a lot of things, and there's just not enough supply. So when demand outstrips supply, then that naturally increases the prices. So let me explain what usually happens in situations like this. But first, please can I ask that you hit the thumbs up button, as this will really help a small channel like mine to grow, and it will also help this video to get in front of more people. So now that is out of the way, what is supposed to happen when inflation is rising and the cost of everyday goods is going up? To combat inflation and rising prices, the Bank of England increased interest rates, which means borrowing becomes more expensive. So things like your mortgage payments will go up, which in turn will result in more people having less disposable income to spend. And in turn, this halts the inflation or prevents things increasing in price even further. Higher interest rates also encourage people to save rather than spend. The reverse also applies. So if the economy is in dire straits and needs a lift, interest rates are lowered to encourage borrowing and more investments to help grow the economy, which, as we know, has been happening over the last 10 years. So what's going to happen now? Well, here's three possible scenarios, and then I'm going to explain how each one of these could massively affect property prices and what you should do to prepare yourself. So, scenario number one, the Bank of England could increase interest rates in response to this rapid inflation that we're seeing. Now, this would, of course, slow inflation down. However, there are a number of drawbacks, and I really don't think this is going to happen anytime soon. If they did increase interest rates, the economy would slow down, markets would fall, and property prices would fall. Now, after all of the money the government has pumped into the economy to keep it upright during the last 12 months, and everything they've done to support the property market, I really don't think they'll be in a hurry to mess that up. So for me, an imminent rise in interest rates isn't going to happen. And I personally think it could be another year or 2 or 3 years before we see an increase in interest rates. However, that could be dangerous, and I think the government are in a sticky situation because of all this quantitative easing and all this money printing they've been doing over the last 12 months. There's no other outcome than to cause a big financial mess. So the question is not will this happen, it's when it's going to happen. There is going to be a stock market crash, there is going to be a property crash, whether this is in 3 months' time or 3 years' time or even a little bit longer. You can't pump this much money into an economy and see inflation rising without any consequences. So please be aware of that, whether you have a mortgage or you've just bought a new house or you're thinking about buying a new house. Please be aware that the Bank of England might be forced to rise interest rates. They might not have a choice. And if they do this, then a lot of people are going to find themselves in a lot of mess with their mortgage repayments. So please keep that in mind when planning your future. So let's move on to scenario number two. Interest rates will be untouched and inflation will continue to rise. So when this happens, our money becomes less valuable and our spending power decreases. So your £10 note will not get you as much as it did previously. Now, I know this topic causes all sorts of debates and opinions, but if inflation does rise, then the governments are paying back with money that is worth less than when they borrowed. So to them, it's not such a bad thing. But for working class people, it will mean less spending power. There can be some devastating effects also because hyperinflation can lead to poverty for a lot of people. And what you tend to find is that salaries and wages do not keep up with the rising inflation. They always lag behind. So there's going to be a point where people literally can't afford to buy things as they normally would do. So this means that poorer families and the working class will fall into poverty much easier. If you're interested, look up the inflation situation in Venezuela, one of the richest countries in Latin America, and now its people are among the poorest. So, do I think the government will allow inflation to rise at a fast rate? No, I don't think they will. Can you imagine what would happen to property prices if they did? So moving on to scenario 3, and this is the one that I think is more likely to pan out. Remember, I'm not an economist, and all of this information on my channel is just my personal opinion, and I totally understand that everybody has different opinions, especially on the subject of finance and inflation and the economy. So, inflation is here, and we all know that. But for me, I don't think it's going to be long-lived, because as we've already identified, the main cause of this spike in inflation is down to the stimulus money that the government has been pumping into the economy during these 3 lockdowns. Coupled with the fact that people haven't been able to spend as much as they normally would over the last 12 months because a lot of places have been closed, I just can't see that inflation is going to rise at a rapid rate. I think what's going to happen is we'll see a spike and then it'll drop back down to its normal level. So to me, this is caused like a big pressure cooker effect, where all of this money has been building up, and the demand for products and services has also been brewing inside this pressure cooker. Then bam, we're let loose and the country goes on a big spending spree. Prices rise fast, the economy looks great for a few months, then it slows down and people have less money, unemployment starts to creep up, then there'll be one whole mighty crash. Or things level out and maintain at that level for a long period. If you haven't watched my video about the 2021 budget and the property crash, be sure to watch that, as I explained about the government, how they are squeezing more tax out of people and businesses by raising corporation tax, freezing the income tax threshold, etc, etc. So I have no doubt that this will cause higher unemployment and have an overall adverse effect on our economy. I think that interest rates will remain low for at least the next couple of years, and then inflation will patter out once this initial spending spree is over and the economy starts to sort of flatten out. I can then see a rise in unemployment and a sudden downturn in the economy once this mini boom is over. Again, this is just my personal views, and I know that everybody has their own views on things like this, so we don't have a crystal ball, so everybody's opinions are valid. So the big question is, what about property? So as a property investor myself, I'm very keen on the future outlook of the UK property market. So usually when there's a big downturn in the economy, like 2020 when the pandemic hits and markets crash, property usually follows suit. However, property went the other way. Now this was mainly down to the government propping it up with your stamp duty holidays and furlough and ultra low interest rates and things like that. So to me, that is the first part of a bubble. And next, demand is outstripping supply, which always rises prices. So again, this is adding to the bubble. And next is the ultra low interest rates, which is meaning that people can actually afford houses that they never would normally be able to afford. Now, it's no wonder we're in the middle of a property boom. Now, house prices tend to rise with inflation, which we know is happening right now. But overdoing inflation can lead to a fear of rising interest rates, which can push property prices down. And also, something that's quite alarming is the property price to earnings ratio. So in simple terms, the average cost of a property in the UK in relation to the average salary. And this figure is rising, and we're looking at a ratio of around 6.5, or it could be even higher. Now, the last time this was this high was 2008 when the property market crashed. Now, as a property investor, I'm not currently buying property at the minute. And it's not just because of this recent boom, it's because I can't actually buy property, because every time I go to look at one or inquire about a property, there are also 8, 10, 15 other people doing the same, and the property's gone like that. It's just become extremely difficult to buy property due to the sheer demand. Properties are selling the minute they're put on the market, so I can't even get involved right now. So for me, I'm not necessarily waiting for a crash, I'm waiting for opportunities. So when will this happen? I personally think that house prices will immediately stall and level out as soon as the stamp duty holiday is over. Makes sense, right? Then, as I mentioned earlier in the video about unemployment starting to creep up and the economy taking a downturn after this sudden boom, this is a point where I think property prices will start to fall. And for me, this will probably happen in the next 12 to 24 months. So if you can hang on until 2022 to invest in property or even buy your first home, then in my personal opinion, this is probably a wise decision. So what do you think? Please let us know in the comments below. And as I said earlier, economics is a very opinionated subject and everybody has different views and different opinions, which everybody's entitled to, and I appreciate everybody's thoughts on this. So I'm certainly happy to hear your views in the comments, and don't forget to hit the thumbs up button, and I'll be back soon with more videos.